Hotel construction financing and how CPACE can complete your capital stack. And building a hotel has never been inexpensive, but in today's lending environment, securing enough capital can be one of the biggest obstacles between a great project and a successful groundbreaking. And traditional construction lenders have become more conservative, and loan to cost ratios have tightened, and equity requirements have increased. And developers are often left searching for additional sources of capital. And that's exactly where CPACE financing, commercial property assessed clean energy is what that stands for. And that's become one of the most valuable tools available for hotel developers. And if you're planning a hotel construction project, understanding how CPACE fits into your capital stack could significantly reduce your equity requirements while also improving your overall project returns. So, why hotel construction financing has become more challenging? And hotel construction is viewed as one of the most specialized commercial real estate asset classes. So, lenders are going to evaluate the market demand, but also your brand affiliation and the experience from the developing side, and the franchise strength and the project feasibility, but also operating projections and cost overruns and interest reserve requirements. And because of these risks, many construction lenders will only finance 50 to 70% of the total project costs, leaving developers responsible for the remaining equity. So for a $30 million hotel development, that could mean contributing $9 to $13 million out of your pocket. Fortunately, another solution exists. So what is CPACE financing? Well, commercial property assessed clean energy, or CPACE financing, is designed to fund qualified energy efficient water conservation, renewable energy, resiliency, and certain building improvements. So unlike traditional debt, CPACE financing is long-term financing, it's fixed rate financing, and it's non-recourse in many structures, and it's transferable upon a sale, and it's paid through a property assessment, and often available for new construction. So for hotel development, CPACE can finance many building systems that improve efficiency and sustainability. So let's talk about some hotel improvements that may actually qualify. So many hotel construction costs may qualify for CPACE financing. And some of those items are, say, your HVAC systems, your roofing, your building insulation, your windows, your lighting, your solar systems, your electrical systems, water conservation systems, building envelope improvements, energy management controls, backup power systems where eligible, and certain resiliency improvements. And the result? Well, millions of dollars that otherwise would have required developer equity, and then you instead qualify for long-term financing for that segment. So how CPs can complete the capital stack. And a traditional hotel capital stack might look like this. You're going to have a senior construction loan, say 65% loan to value or loan to cost. And the developer equity required would be 35%. And with CPACE financing, you would have a senior construction loan, say it's 60 to 65%. And CPACE financing from 15 to 25%. And your developer equity requirement would only be 10 to 20% in that situation. And that reduction in required equity can dramatically improve the return on investment while allowing developers to pursue multiple projects simultaneously. So why hotel developers like CPACE? Well, there's a lower equity requirement, and that's usually a no-brainer. And instead of tying up millions of dollars in one project, developers can preserve liquidity. There's long amortization, so many CPACE loans extend to 20 to 30 years. And this reduced annual debt service compared to a shorter mezzanine debt structure is advantageous. But it's a fixed interest rate deal. Unlike floating rate bridge financing, many CPACE programs provide predictable payments over the life of the financing. There's no ownership dilution. So rather than bringing in another equity partner, developers can maintain ownership while completing the capital stack. It improves overall returns. So there's less required equity, and that often produces stronger cash-on-cash returns and higher internal rates of return, or IRR. And how CPACE works alongside construction financing. Well, CPACE is not designed to replace the senior debt. Instead, it complements the traditional financing. And a typical project may include a senior construction loan, the CPACE financing, the sponsor equity, and if you're able to get any tax credits, that would go there. If you have any opportunity zone incentives where applicable, that would go there, or any local development incentives, that would go there as well. And the result is a more efficient capital structure that helps projects move from concept to construction. So which hotel projects may benefit the most? Well, CPACE can be particularly attractive for select service hotels or limited service hotels or full service hotels or boutique hotels or extended stay hotels, but also Marriott developments and Hilton developments and Hyatt developments and IHG developments, Choice Hotels developments, and adaptive reuse hotel projects. So why work with CommLoan? Well, finding the hotel financing isn't about just getting your loan approved. It's about structuring the entire capital stack. And through the CommLoan platform, developers gain access to hundreds of commercial lenders while also evaluating complementary financing solutions like CPACE or bridge financing or SBA options when they're applicable, and also permanent debt options. So rather than relying on one bank's lending box, developers can compare multiple financing structures to determine the most competitive solution for their project. And every hotel project is different, and construction costs and market conditions and franchise requirements and capital availability all influence the optimal financing strategy. So, final thoughts for the day. The biggest challenge in hotel construction today isn't finding the opportunities. It's about assembling the right capital stack. And CPACE financing has become one of the most effective tools for reducing equity requirements while improving project economics. So whether you're building a boutique hotel, a branded select service property, or a full service hospitality development, combining traditional construction financing with CPACE could be the difference between delaying a project and moving forward with confidence. So if you're planning a hotel development, let's evaluate your project and identify financing options that are going to maximize your leverage while also protecting your long-term returns. Please give me a call today to discuss hotel construction financing and customize capital stack solutions that are available through the CommLoan Empower program. You can start by visiting my website, billrapp.commloan.com. You can start a pricing quote as well to schedule a consultation, so that way we can have a conversation. But that's it for the day. Thank you for watching.